Hey, it's your man, chollyP. This is going to be the last video that I record about a strategy. This is the reversal strategy video, and I'm not going to spend a lot of time on this one at all because reversal setups are what you're going to see the least of by far. You ain't going to see a lot of these. And I mean, there's multiple types of reversal setups that pop up. For the purposes of keeping it as simple as possible, I'm only going to focus on triple formation reversals. So we're going to look at a few examples of a triple formation on the H1 chart or the 1 hour time frame. And we're also going to look at a few examples of triple formations on the 15-minute time frame. The first example is a triple formation H1 reversal pattern on GBP/JPY. So with H1 triple formations, what you're looking for is you want 3 hits either inside or beyond the overbought and oversold bands. For those who don't know what the overbought and oversold bands are, essentially these dotted lines, we've got 2 dotted lines here at the top and 2 dotted lines here at the bottom. The idea is that when price goes up into the ones at the top, that means price is overbought and it needs to start coming back down towards the middle. If it's at the bottom, that means it's oversold. It needs to start coming back up towards the middle. So you want 3 hits. In this situation, we got 1 here, 2, and 3, like 3 humps, so to speak, that are either inside or beyond those overbought and oversold bands. You also need divergence. Divergence, for anyone who doesn't know, is, so you see how price at the top here is going. We got the 1, 2, 3, and essentially from the first one to the last one, it's ever so slightly up. It barely goes up, but it goes up. While down here at the same range, we've got price showing it's overbought right here, but then this shows the momentum of price is going down, even though our candlesticks show us it's going up. That opposing information is divergence. So you need 3 hits in the bands, you need divergence, and then the very last thing is on the last hit, you need a major candlestick reversal pattern. So you will need to kind of pick up on basic reversal patterns. Either you're going to get the 3 soldiers reversal pattern, which, I mean, that's exactly what this is. Let me zoom in on it. You got 1 candle that goes up, and then you have 3 candles that are similar in size coming down. So just to illustrate what I'm talking about, what we have here is we've got so we've got a green candle that's going up like that. Okay, and then we have, you want like 3 red candles beyond that that are kind of similar in size, and then those are coming down. That's a 3 soldiers reversal pattern. Or of course, if you're looking to buy, then it would be the opposite. You would have a red candle that's coming down followed by 3 candles to the upside like this. Well, I'm running out of space, but you get the idea. So that's essentially what we have here. 1, 2, 3. Here's a reversal pattern, that 3 soldiers reversal pattern, and then divergence. After that, only other thing you need to make sure of is you go down to the 15-minute time frame. See, we were on May 2nd. And you just want to make sure, as always, that you enter the trade on the 15-minute time frame on the opposite side of the 50 EMA. So since we're looking to sell this one, we need to enter the trade above the 50 EMA. When that 3 soldiers reversal pattern ended, it was right here at the bottom of this candle right here. And so you just jump in the trade when that candle closes, boom, because you're already above the 50 EMA. Actually, it'd be more like right here. And then this is your candle. You don't have any drawdown on this particular trade, and you could have caught almost 200 pips that same day. Now with reversals, it's safe to hold those. If you want to hold those 2, 3, 4 days, whatever, it's pretty safe. It definitely 2 days is safe to hold a reversal trade. If you catch it at the where the reversal starts, then yeah, go on and hold that for 2 days, maybe 3, and you can catch a lot of pips. So that's one example. Let's take a look at another one. So we got the same thing here on the Euro CAD. You've got 3 hits to the high inside the bands. Now, when we're talking about hits and you're trying to figure out how do I decide what's an actual hit, like how do I count 1, 2, and 3? The easiest way to do it, which is hard to do, like it's no getting around, like it's hard. But what you're looking for essentially is, no matter what you have, you're looking for that dip. That's one dip. You might have some stuff like this going on, 2 dips. Then you get something, boom. But like this would be hit number 1. This whole thing, I would say, is hit number 2. Then here's hit number 3. Because you're looking for these dips. So you need 2 dips. So right here, where would I say my 2 dips are? I would say here's a dip right here at the bottom. So for me, I'm gonna count this whole little thing as 1 because we got just a little dip right here. This whole little cluster right here, I'm gonna say is 2. So that's gonna be my 2 hits. We got a little dip here. It goes up to a 3rd hit. Here's my 3rd hit. Then we've got divergence. Even though it starts way over here, it still counts as divergence, where down here it shows us we've got it overbought, and then it shows the momentum of price is going down, versus over here it says the price is going up. The only other thing you need is a major reversal pattern on the 3rd hit. I've talked about on some previous videos, this spinning top pattern is a super powerful pattern. So on the 3rd hit, we got that spinning top reversal pattern. You can go ahead and enter the trade right there, or depending on what time that happens, let me see what time this one happened. I think that's outside of my trading times. Oh yeah. So I probably wouldn't have entered right there. I probably would have had to wait till the morning and entered at the top of this one, because I don't trade after 4 a.m. in the morning. And when that reversal pattern closed, it closed right at 4 a.m. So I wouldn't have taken that trade. I would have been safe if I did. I see it in hindsight, but the easiest way to take that one would have been to go to the 15-minute time frame. See, we were on July 7th. And in the morning time, it came back up above the 50 EMA, and you could have gotten in right here above the 50 EMA. You take the trade here, boom. That's 100 pips that same day. Once again, it's a reversal, so you hold it until the next day. You wouldn't have caught much the next day at all, but then the day after that, on day number 3, is when it started tanking down even further. So once again, safe to hold reversals for 2 to 3 days to get more pips. And let's just take a look at one more example on a 3 hits to the high on H1. Now this 3rd example kind of goes against what I just said about the humps like this, but it's just another example to show you, because with the reversals, like I said, they are tricky. It is hard to catch what's a hit and what's not a hit. And sometimes you have to take educational risk. So in this situation, we don't have those humps, but we do still have what I would say you could count as 3 hits, because you've got that 1, there's a 2, and then this right here, this green, red, and this red would be number 3. Reason being, you've got this green, it's all in the bands or above the bands. You've got this green and red because you got that red, and then it goes up. I'm like, okay, it's kind of a head and shoulders pattern basically. So you got that 1, 2, and then it made another up down motion for 3. And on that last one, on this one, it broke the structure. Now, again, this is beyond my trading hours, so I wouldn't have taken that trade. I would have had to have waited till the New York session to start in the morning. And here's that same trade on the 15-minute time frame. We could have waited on the New York session. And again, you want to make sure you take that trade on the opposite side of the 50 EMA. So the earliest I get in that trade, let's see, would be this candle right here. When it wicked, I would have had to got in on this wick. So you catch that wick, boom. That's a 100 pip trade that same day, or you can hold it into the next day and catch upwards of about 200 pips. So, and then that one kept going down if you would have held it on day 3. But that's the H1 reversal pattern. 3 hits to the high. inside or beyond the bands. On the third hit, you have a major reversal pattern, which this green, red, red, that is a reversal pattern as well. I don't remember what it's called. It's like a evening star, morning star, something like that. I don't know the names of them, but that's a reversal pattern as well. All right, now we're going to take a look at the 15-minute time frame triple formation setups. Even though it's on a 15-minute time frame, you still need to recognize something on H1 first, which basically what's going to happen is price is going to make a real volatile move into the bands like it did right here. Like that's a really volatile move down. And then you still want it to be overbought or oversold down here, but you do not need divergence at this point, even though it might show, but you don't need it. And this one, it did kind of show up because of course, price went down from there to there versus right here, it shows momentum of prices going up. So that does show you divergence, but you don't need divergence, but you do need it to be overbought or oversold. So we need the Ehlers Fisher below the 10 level down here on this particular setup. And then you're always going to get a doji or a hammer candle, one of the two. So you're going to get the volatile move into the bands followed by a doji or a hammer candle, which we have right here on this green candle. When you see that, you go to the 15-minute time frame. See, we're on March 24th. All right, now once you get to the 15-minute time frame, that's when you want to start counting your 1, 2, 3. Here you have, here's your 1. Let me just do it this way. Here's your 1. Here's your 2. And then here's your 3. On your third hit, when price comes back above the 10 EMA, you can go ahead and hop in that trade right there. And then that right there is going to be, if you hold that into the next day, over 200 pips on that trade. These you will not see a lot of, so I'm only going to go over one more, but I'm just showing you what's out there. All right, so the last one we looked at was a buy setup. This is what a sell setup is going to look like. Now on this example, this is a tricky one, but I'll try to walk through it quickly. You got a volatile move up into the bands followed by a hammer or a doji, which we got right here. Now, as you see, price ended up going up a whole nother 80 something pips after that. So how would I have known not to get into that right there? Well, when I go to the 15-minute time frame, we're on February 28th. Clearly, we hadn't got 3 hits on the 15-minute time frame yet. So if I can't count 1, 2, 3 hits to the high on the 15-minute time frame yet, I know not to get in that trade. It's just, it's just a volatile move to the bands at that point. I go to bed because my trading hours are over. By the time I wake up in the morning, we're way up here. Now I can check again because also I see that, which even though it's not required, we do have divergence from there to there, from there to there. That's opposing information. We do have the divergence. I just needed price to be overbought or oversold at some point when that happened, which it was overbought right here. But once I see that, now I'm saying, all right, now let me go to the 15-minute time frame again. And now I can say, look, I have 1, 2, and then of course 3 right here. Now, when you're talking about the 15-minute time frame, you do not need the third hit to be a major reversal pattern. You simply need it to just go past the 10 EMA. Once it goes past the 10 EMA, you enter that trade. So you can get in this one here. Your drawdown about 10 pips almost. But then that same day, you can catch up to 170 something pips, hold it until the next day and catch upwards of 250 pips. Reversals are tricky. That's all I can say. That's why I waited and did this video last. If you never want to trade reversals, I understand. Don't even I get it because these are tricky and they don't show up that often anyway. And this is just one type of reversal that I'm showing you. The triple formations on H1 and M15, like triple formation reversals is one type of reversals. I know how to do some other ones, but there's really no point even going into all that because they don't show up enough for it to matter. So yeah, that wraps up our strategy training. The next video is going to be a motivational / mindset video. I definitely encourage you to watch that video. Don't skip over it. It's going to be a little bit of tough love in it, more than likely. We'll see how I'm feeling when I record it. All right, y'all.